This is Eric from Traders Helping Traders with this week's Tricks of the Trade. This week I wanted to talk to you a little bit about the importance of closing prices. I mentioned this in the manual that I pay attention to how the market closes, as this will often give us a clue as to what prices will do next. This last week we had an excellent example of this in our March feeder cattle trade. So let's take a look at how that's set up. This was March feeder cattle toward the end of last week, and you can see the market is in a long-term downtrend. Prices have been falling for about the last 6 weeks, when last Thursday prices bottomed out and made this high closing price. Technically, in candle terminology, this is referred to as a doji, where the market opens and closes at the same level. But this particular bar here, a few days prior, shows us the same type of activity. So we have two bars within the space of a few days that are showing us exactly the same thing. Namely, the market opens, falls down, hits this price, and snaps right back. A couple days later, same thing. The market opens, prices come down, and before closing, the prices snap right back. So what does that tell us? That tells us that the market is especially sensitive to this particular price level, which happens to be around 99.50. Remember, I told you in previous sessions that you want to pay particular attention to these bars with these long tails to them, because they will often highlight the more important support and resistance areas. And that's exactly what we have happening here. So how do we trade this? Well, since we're expecting a reversal, and since this is predominantly a downtrend, we would look to buy this market, but only if prices continued higher the following day. We don't want to make the market move too far, because since this is a counter trend trade, we really don't know how far prices are likely to retrace. We know that the market is very likely to retrace back to the 20-day moving average, which represents the monthly average price. If we threw a trend line on here, you could see that the trend line more or less approximates that moving average line. And this is just a quick and dirty little trend line. That's not really how we draw our trend lines, but you can see that it still approximates that same area. So ultimately, the furthest we would expect the market to retrace would probably be somewhere around here, or perhaps even a little bit lower. We get some support and resistance area hits around this level here, around 103.60. They might continue a little bit higher, perhaps getting somewhere around here, around 104, but not too much higher. And again, I'm just kind of transposing where this moving average line might be, as it has a tendency to highlight the more important support and resistance areas for us. Of course, if it breaks 104, then your eye is naturally drawn to this area here at 104.70. But I'm getting a little bit ahead of myself. We're looking at trading this possible reversal, and what we want to do is we want to take the market long above the high of this bar, which is showing us the strong support. And we don't want to be too greedy. We want to take our profit relatively early, because we're not always expecting a big move. Exit stops, well, ideally they should go below the low, but in our particular instance, since this is feeder cattle and it's a relatively expensive market, we placed it just below the closing price, where you can see we have a few hits from the last couple of days. Let's play this forward, and you can see that the next session gave us a textbook move where the market broke the high, traded high enough for us to find our profit for the day, and then fell off again before the end of the session. So a down and dirty, hit and run kind of trade, just get in, get out, take your money, but watch those closing prices because they'll often give you an idea of what the market is likely to do next. And that is this week's Tricks of the Trade.